Well, I've taken off a number of positions, and I've added some shorts, added some puts to protect stocks for earnings. They've done a little bit, but ineffective when you look at the carnage that's out there in stocks like UPS and Microsoft, which both had good quarters. So I'm still very cautious on the markets. We're through earnings, and earnings hasn't been a lift. Even though it's a good earnings quarter, put it in perspective, it's still down 16% year over year. So markets are way overvalued, and Corona is a big issue. I don't see returning to the March lows because I checked the number of cases in China and South Korea and the Philippines and Malaysia and Vietnam, which is a supply chain, and there it's very much contained. Little spike in Malaysia, but definitely controllable. If that goes the way that we're seeing Europe and the U.S. go, then it's look out below. But right now, tech is the place to be. I also think there'll be better buying opportunities because stimulus won't be on the table now until at least after the election. And if we get it then and Trump's reelected, we know that it's going to be a very skinny plan. I don't think it'll be enough because the Republicans have said, some said we have enough, some have said 500 billion. That's not enough. So bottom line to me is we're not going to know who's president for a number of weeks after the election. That's optimistic. That the downside is still apparent because there's no upside catalyst.
All right.
Period.
So Jenny, to Weiss's point, Art Cashin saying today that basically the same thing. If you start seeing a pickup in cases in Asia, quote, all bets are off. That's according to Art Cashin. Weiss said something interesting to me that I want to discuss with you, that stocks, the market's way overvalued. You know, we've had people come on the show in the last couple of days and say the market's way oversold. So which is it?
Right. It depends. Yeah. It depends on which part of the market you're invested in. If you're invested in the high tech stocks or the high market cap tech stocks or the high growth stocks, yeah, it's overvalued. If you're invested on the value side where I am, it's so cheap. I mean, I manage a portfolio of dividend stocks that lean value. The forward multiple on this portfolio is like 12 times earnings. And you can look at value versus growth for the year and you see how wide that divide is. So I don't think this is a time when you can answer that broadly. I think you need to answer it at a granular level and assess what your portfolio is, where your portfolio is invested, and then say, is what I'm invested in overvalued or not? In my case, it's painfully not.
Then tell me why, because now I'm struggling to understand why you would sell Qualcomm, given what you just said, and how you made the case seemingly for it the last time you were on in a conversation about Intel that we were having. So what's happened since?
So Qualcomm just simply reached the price target that we had looked at it for. We did a ton of work on it. We've been doing a ton of work on what the price target is for months. And we came up with the fact that we thought it was probably a max valuation of $130 to $150 a share. So last week when it got up to about 128 and only had a 2% dividend yield, it was time to sell at that point. And this is a really, specific portfolio decision. It's not a broad-based macro call. But I looked at that. I said, this might have 15% upside. It might have 15% downside. But I know that I can reinvest, and I have a short list of things that I want to reinvest in. I know I can reinvest in something that's now cheaper with bigger yield, which is what I need, and that fits better for my portfolio. So this is not, hey, if you own Qualcomm, this is not go sell it. This is the decision that made sense for my portfolio that I manage for my clients.
So Joe, what am I supposed to do?
It wasn't a big broad thing.
Forgive me, Jenny. Joe, what am I supposed to do? Do I go back to stay-at-home stocks because now I'm really worried about where the virus trajectory is? Do I go to big tech because Cramer, on the heels of Microsoft, says there's not going to be a turn in tech until Microsoft bottoms?
So sometimes the best trade is no trade. And we talked on Monday about Tony Dwyer and his perspective, which was we just have to get through the next couple of weeks where you're not going to have very much clarity. This is the most classic example, Scott, of good news and bad price action. I keep mentioning that because when you look at earnings reports, we're witnessing very strong earnings, but yet we are not seeing the response in terms of price action. So I'm sitting back, I'm waiting. I'm looking at two critical indicators right now, one of which is oil. Exxon and Chevron this morning traded to their lowest levels since March 23rd and March 24th, respectively. Oil has been, for the better part of 2020, the proxy for a surge in virus cases. It telegraphed what was coming in January, and it's doing it now once again. We would need to see a turn in energy for me to get enthused about re-entering the market. Secondarily, yields. Yields are the proxy for stimulus. We need to see a rise in yields. We want to move away from the safe haven buying that we've experienced over the last couple of days. Those two indicators, I step back into the market and I begin to assume risk once
Well,
again.
it could be a long wait, right? I mean, if you're really going to you're banking on energy to be the tell. Why would energy turn anytime soon, right? We're on the cusp of potentially more lockdowns in Europe. We may not get lockdowns here, probably won't, but you're going to have the potential of a pullback in consumer behavior. That seems like a tough place to look